Shares in Tesla have fallen by about 7% after Twitter users voted for Elon Musk to sell 10% of his stock. The billionaire asked social media to decide if he should offload $39 billion worth of shares, with almost 58% voting yes. The stunt follows a US Democrat proposal to tax billionaires on the annual increase in value of their stocks and shares. Musk has promised to abide by the poll results. Joining me live now, Scott Phillips, the Chief Investment Officer at the Motley Fool. So with that 7% nosedive, Scott, should we dive in if we can afford it?
Peter, who amongst us hasn't sold $21 billion worth of stock based on Twitter's say-so? I mean, you know, Elon is just the latest in a long line of people who've done exactly. I don't know, mate. Look, it's a really, really, really expensive company. More than $1 trillion in market cap, even after this fall. And it's gone up phenomenally since I signed that Hertz deal not too many weeks ago now.
Yeah.
It's a heck of a story. Musk himself is becoming something of a meme, for better or worse, running his social policy, his investment policy, apparently, and some of his company announcements on Twitter. Remains to be seen whether the SEC dives in and wants to take him to task or not. I wouldn't be look if you didn't know Twitter Tesla shares, at more than $1,000 each, a 7% fall's probably not going to change your mind. Equally, plenty of people, imagine that, 42% of people saying keep them, almost 60% saying sell them.
So they're 1,000, is that what they are, US a share?
Over $1,000 US a share.
So still a way short of Amazon though, Scott.
Per share, that's right, but it is a $1 trillion business, one of the very few $1 trillion businesses on the New York Stock Exchange, one of the richest companies in the world, and makes Musk the richest man in the world. As you say, on a per share basis, a long way short of Amazon. And of course, Berkshire Hathaway shares, which I also own, about $300,000 a piece. So it depends how you want to divide it up. But Tesla, look, they're doing a good job. They're getting the sales through the door. They're getting profits in the door.
Wait,
those are good things, but whether or not it's worth that sort of money.
Berkshire Hathaway, are they $300,000 each?
Yeah, crazy, isn't it?
Holy dooly.
It's amazing. Yeah.
Wow. Okay, domestic and
compound return.
Domestic and international travel might only just be starting to recover, Scott, but that hasn't stopped one group bidding a large sum of money for Sydney Airport.
$24 billion, Peter. An investment consortium, including mostly super funds, who are looking for these kind of infrastructure assets. They're good assets for super to own because they're super reliable, no pun intended. Usually, pandemics aside, the cash flows are really good. This is a high-quality asset. It is probably the preeminent airport asset, certainly in Australia, probably one of the top half a dozen around the world, mostly because it's the gateway to Australia. It's the gateway to Sydney, and even when a Western Sydney airport is built, there's a very, very good bet that plenty of traffic keeps coming through. And of course, for those of us who parked at Sydney Airport, the car park itself is its own gold mine. You need a small,
just getting the trolleys
or a big mortgage.
Just getting the trolleys is a hindrance sometimes.
Exactly. And that's the monopoly asset, right? If you own a monopoly asset, you get to charge those prices, and that's the beauty of it. Super funds, as I said, want that sort of cash flow. They want the stability, and Sydney Airport certainly ticks those boxes.
So what do you make of it going forward then? Are things going to become more expensive? What do you think if it's owned privately? What's this going to mean for the consumer, Scott?
I'd be really surprised, Peter, there's any meaningful difference to the operation of the business itself. The super funds, if this was a private equity takeover, you might expect a whole lot of wheeling and dealing, things being sold off, prices going up, that kind of stuff. The super funds don't really want to make the quick buck. They're not looking for a buy and leverage up and flip. It may happen, but it's really, really unlikely. These guys want it for the cash flow alone. Yeah. So that'll mean, I assume, they'll pretty much just keep current management in place. Current business model as it is remarkably successful. They just want the daily, weekly, monthly cash flows from that, rather than doing anything particularly unusual. So this is probably for consumers, for travellers, probably the best buyer, because if private equity picked it up, you could probably add some more dollars to that cup.
Yeah, it'll be interesting to see how the airlines go negotiating their separate fees and what have you. Now, after last week's talk of big pay rises for summer, there's some more good news when it comes to skilled job workers, Scott.
Yeah, this is a tough one, Pete. Great news for employees, but tough for businesses. It's a bit like the interest rate discussion. We have it. We say, well, when mortgage rates go down, we say great news for mortgage holders, terrible news for savers. In this case, skilled job vacancies at a 13-year high. So employers are desperate for staff. Yeah. They often can't find them. Great news for those just looking for a job or who might want to talk to the boss about a pay rise or changing jobs, because there's plenty of jobs out there to be taken, which is wonderful news. One economist actually expecting unemployment to dip below 4% in 2022. So those are all really good numbers. The flip side of that is people are having a really hard time finding staff. A single anecdote, I've got a Christmas party I'm planning to attend sometime next month, and they've had to cancel and change venues because the venue can't actually deliver the number of staff they need to hold the event. So when you start thinking about that kind of stuff, the job vacancies, again, great for employees, but really tough for businesses. And coming out of the pandemic, we kind of want a nice balance, right? We want people to get paid fairly. A little bit of pay increase is good for everything, but too much of it and not enough workers to go around. I mean, businesses can't invest, they can't grow the way we need them to actually put that money back into the economy. So as always, balance is important. This one feels like it's tipping probably too far in one direction. The flip side of that, of course, is that for the last decade or so, wage increases have been hard to come by for most occupations. Okay. So it might be something of a catch-up.
Scott Phillips, good to chat as always. We'll talk to you soon.